afternoon and welcome to BizTech's Asian Midday Market Watch. I'm Brian Fernandez and it's the 27th of February. And we have our guest, Jeffrey Halley, Independent Market Analyst. Now, Jeff, as always, thanks for coming on the show.
A pleasure, Brian. Always a pleasure.
Now, Jeff, before we get your insights, let's take a look and see how markets have performed across the region. And we're going to start with the Straits Times Index. In Singapore, that's down 0.93%. The KLCI over where I'm at in Malaysia is up 0.41%. Shanghai is up 0.58%. The ASX All Ordinaries is up 0.17%. But across the Nikkei, it's in the red, it's down 0.11%. The Hang Seng is down 0.96%. Rounding up the numbers in the region, we've got the Kospi, which is down 0.7%. Jeff, your views on market performance in the first half of the day?
I think we're seeing some fairly choppy range trading. There was a lack of direction from the US, and that rally had run out of steam as well overnight. So that's set up some negativity in Asia anyway. There's been a lack of headlines, a lack of data really. Japan's inflation data today has impacted the Nikkei, and we'll perhaps talk about that shortly. So really, markets have been left with their own devices, and perhaps markets are also jostling for position ahead of some US data that's going to be quite important due out towards the end of the week. So I'm describing this as noisy, choppy range trading in most asset classes at the moment.
Okay, now I'm going to first of all pick on a few things that you've just talked about. We start with Japanese inflation. Now, core inflation beat consensus, rose by 2% versus 1.8% as expected. Headline year on year as well rose 2%, also beating expectation. Does this mean that the Bank of Japan will exit yield curve control and zero interest rates policies really soon, perhaps as early as March or April?
That's certainly been the reaction in the market today, and that's a very good question, Brian. I think we need to look at last month's figures, the previous numbers as well. Although those inflation numbers have beaten expectations today, they were lower than the previous set of data points. So inflation is actually trending down in Japan, and I think that will give the Bank of Japan some pause. We are around their 2% ideal target rate at the moment, but the question is, can it be maintained? There's a couple of things I think here that are going to hold back the Bank of Japan, but we have seen JGB yields, for example, rise today on that data. We saw the Nikkei retreat. We've seen the yen strengthen slightly against the dollar. But when you look at some of the recent data as far as domestic consumption goes, that's been pretty weak in Japan. And I think that's going to be really hard for the Bank of Japan to pull the trigger on reversing a multi-decade zero interest rate policy as soon as March or April. I do believe they will do so, but I think that the expectations themselves should probably be set towards the middle of the year, around June, rather than at the end of this quarter. But in the short term, we are most likely going to see JGB yields edge higher and perhaps some strength in the yen. Although I do note that dollar yen hasn't fallen really through 150. It still seems fairly solid at those levels.
Okay, now I want to pick up on a term that you used just now, noisy range trading. Now, that's across the board from stocks to bonds to currency markets. What else are you looking at as this week progresses?
I think we really need to pay attention to the personal income expenditure data on Thursday from the United States. There will be GDP data tomorrow, I believe, but I think that will only generate short-term noise. The PCE, as it's known, is a very favoured economic indicator that the Fed watches very closely, the FOMC. And we're expecting plus 0.3 for income and plus 0.2 for expenditure, much like last month's data. Now, those numbers come out higher, and we can see, I think, some of the noise this week has been caused by some concerns that maybe those numbers are going to be a little more entrenched than the market hopes for. So if we see high prints 0.4, 0.5%, we could see an acceleration of that Fed easing trade being unwound. So in that case, we could see US bond yields move higher, the dollar move higher, and it's likely to be a headwind for stocks. But we have to wait for Thursday for that, and there's very little data ahead of it. So in the meantime, I think we are going to be headline driven in these choppy range trading conditions.
Now, finally, one asset class that has moved is Bitcoin. Now, it's touched 57,000 early this morning. It's retreated a little bit. It's rose like 7%. What's behind this increased momentum or upward of Bitcoin?
Well, it's very interesting because I was also reading some other stories around the tracks today that these ETF inflows into these Bitcoin ETFs have actually started slowing down as well. But I believe the main reason is because of a company called MicroStrategy. Now, MicroStrategy is an enterprise software company. They make business intelligence software and other such products. But around, I think, 2020, they started buying lots and lots of Bitcoin. And they said that they weren't getting any returns on their cash surpluses, so they're investing it in Bitcoin. And people, and probably including myself, if I'm honest, thought they were a bit crazy. But they've been buying a lot of Bitcoin over the last few years, and they now own around $10 billion worth of Bitcoin. It came out yesterday that they'd bought another 3,000 Bitcoins, I'm guessing at around these 50,000 something levels. And we all know that the digital asset classes love running on a bit of sentiment, particularly when it's good news. And I think that's what spurred this buying in the market. When MicroStrategy had told everyone they'd bought these Bitcoins, it rose by 7% and a bit in Wall Street or in New York trading. And it's actually been up, I think, around about 4% today, touching 57,000 before coming back to 55,000. That's still 2% on the day, a good show. And I'm guessing with this momentum behind the trade, the next big number for the markets will be the 60,000 region.
Now, on that note, Jeff, thank you very much for your insights. Thanks for coming in the show.
A pleasure. Thanks, Brian.
Now, we've been speaking to Jeffrey Halley, independent market analyst, and this has been BizTech's Asian Midday Market Watch. I'm Brian Fernandez. Check out the show on our website, www.biztech.asia, our social media platforms, as well as our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.